There is one thing separating us from the biggest crypto bull run that we've ever seen, and that is this week's inflation data. So in this video, I'm going to break down what that data is. Why is it so important for us as investors, and what do I think is going to happen in the next week? If that sounds good to you, like and subscribe down below, and let's hop in to today's video. All right, guys, so what we got going on this week is we got PPI coming in on Wednesday, we got CPI coming in on Thursday, Producer Price Index, Consumer Price Index, essentially telling us how much have goods and services increased in price in the US. This is important to understand because the Federal Reserve is waiting on these numbers to figure out what they're going to do with rate cuts. Now, previously, the Fed has been worried that tariffs were going to increase inflation. And if they were to cut rates too soon, they would essentially create more and more inflation on top of the tariff inflation. So they needed to keep rates higher, keep monetary policy restrictive to try and keep prices down so that tariffs did not create too much inflation and make things essentially unaffordable for the average consumer. What we're learning is that tariffs are not a big concern here. We've seen the data now from April, May, June, July, August, and it's not coming in particularly problematic. And so what the Fed has consistently said, they want to see the data from the summer months, June, July, August, to understand what tariffs are doing. Tariffs are not creating the inflation that they thought they would. And so with that being said, it's time for the Fed to cut rates. The labor market has been weakening, and we covered that in a video last week. If you want to go check that out, we lay out the entire labor market situation there and why I think the Fed is definitely going to cut rates in September. What the inflation data is going to tell us is to what extent will they cut rates. And since we know that tariffs are not creating the inflation that we feared, that gives the Fed more room to cut rates. And so there's really only one thing that could stop us, and that's the inflation data this week coming in above expectations. I believe that the Fed is going to do 25 basis points of cuts really regardless. We'd have to see, I think, insane inflation for the Fed to not cut 25. The labor market needs some assistance and it's getting too weak. And so the Fed has to cut rates to help this out. That being said, remember that the Fed cut by 50 basis points last September 2024. The Fed cut by 50 basis points for the same reason, to help the labor market, because labor market weakening is non-linear. And so it's not just going to go step down. It could go step down and then fall off a cliff. And that's what they want to avoid. It's disastrous for any economy. And so have a look on your screen. We've got the chances of a 50 basis point cut, 11.8. We got the chances of a 25 basis point cut, 88.2. So 100% chance of a cut either way. And so what I think the inflation data this week's going to do is it's going to allow the Fed to either cut by 50 or it's going to restrain them to only cutting by 25. In an ideal world, I think the Fed actually cuts by 50 basis points. The economy is arguably in a worse spot than it was last year. And I think a 50 basis point cut is needed to get ahead of the weakening labor market data. With labor market weakness, where there's smoke, there's fire. And when you're seeing the hard data, the data in front of you, telling you that there's weakness, there's typically more weakness ahead. And so the Fed will cut by 50 basis points to try and get out ahead of that. That's how that works. And so the inflation data this week is important for us to keep an eye on because it lets us know what the Fed is likely to do. And so as long as inflation data this week comes in about expectations, at maybe very slightly above, slightly below would be better, obviously, but as long as it comes in around the expectations, I believe that the Fed will be in the all clear for a 50 basis point cut. Not a prediction, but that's just how I'm interpreting it. And so I've also got Bloomberg economic correspondent Michael McKee. He's going to chime in on what he thinks about inflation and the upcoming rate cuts. Have a listen to what he has to say.
How important are those numbers? Yes, for him, we know he wants to see them, but for other policymakers as well, how pivotal are those releases this week going to be?
I don't think they're going to be that important as long as they come in approximately where we think they will. If there's a big move up in inflation, it changes the calculus, but nobody's really expecting that. What we are expecting is that service price inflation is probably still going up, which will worry the hawks, people like Jeffrey Schmidt, who has said he's not interested in moving rates, and Alberto Musalem, who also is in that same camp, and their voters. The Goolsby's the third voter, fourth voter is Susan Collins, because obviously John Williams votes every meeting, and he said he's for rate cuts. So we're probably leaning towards rate cuts with some holdouts who are pushing back. And then the question is, does that limit their ability to go 50? Is that there are people who don't think they should cut at all? How many others might be who aren't voters but would have a voice in the decision?
And so just like Michael said, the issue here is, will inflation limit the Fed from cutting rates? The impetus to cut rates, the labor market weakness, that is there. Now, inflation, will it limit their ability to go 50, or will they have to hold back to 25? I don't think that there's really much of a situation where it stops them from cutting 25. Again, we'd have to see crazy inflation in order for that to be the case. I think 25 is a guarantee, really no matter what. Again, barring any extreme inflation that we really haven't even seen before. And so I think as long as inflation behaves itself and continues to behave itself in the rest of the year, we could see 2, maybe even 3 cuts out of the next 3 Fed meetings. I've also got a clip here from Scott Cronert. He's from Citigroup. He thinks that this is going to be really bullish for risk assets. So do I. About 30 seconds here. Listen to what he has to say.
The inflation data does not reflect what we would think normally of in an overheated economic situation. So I think what we're looking at are ongoing transitory inflation effects that ultimately say, hey, we're okay on the earnings picture here. We do think there's an emerging labor concern, and we do think, therefore, that the Fed's in position here to go down an incremental easing cycle that ultimately should be a net positive for risk assets, particularly as we look ahead into 2026.
And so Scott thinks that 2026 could be a bullish year as well. I'm also inclined to agree. I'm going to do a video on that sometime in the next couple weeks. Keep an eye out for that. I'm going to break down my thesis why I think 2026 is actually going to be very good for crypto. But have a look on your screen. I got TradingView pulled up, and we got the others chart. That's the total market cap minus the top 10, so the altcoin market. And have a look in 2024 when the Fed cut 50 basis points. Look at what the altcoin market did. It shot up. Here's about 200 billion, shot up to about, so we added about $160 billion to the altcoin market once the Fed cut rates. And then, we fell off here, and this was the tariff stuff, and where we are now is we're actually at about 315 billion. So we're only 40 billion below where we were when the Fed, cut rates last time and we ran up. So theoretically, if it has a similar effect, which I think that it will, we could see ourselves pushing up here into the 400 billion. And then if Bitcoin dominance falls and some of the liquidity from Bitcoin rolls over into ETH and other alts, I think this could be the start of a very good move for alts heading into Q4. I think Q4 is going to be very, very bullish. And if you want to stay up to date on why I think the rest of the year and 2026 is going to be very bullish for crypto, make sure you like and subscribe down below. I'm going to keep you up to date on all the macro developments to keep you informed and convicted in this crypto bull market, so you don't panic buy dips and have to buy back in on the rips. It allows you to sit comfortably through volatility with me keeping you up to date. Thanks for being here, and as always, we'll see you in the next one.